Welp, Trump is at it again, y'all. Now, him and his Department of Justice is trying to go after Jerome Powell, the federal chair. Crazy, diabolical, nasty work. But what does that mean? This is an opportunity for you to make a lot of money when it comes to investing. The reason why? Two things are going to happen. Either Jerome Powell is going to stay firm or he's going to say, man, forget this. Adios, amigos. If he stays firm, we will see the market continue to go up. Historically, when the Fed lowers rates, and they lowered rates already 3 times in the past 12 months, the market on average goes up by 18% a year. On average, the market does 9%. Now, past performance does not guarantee future results, but we should see an increase in the market anyways because of what has happened previously. Also, we don't have that crystal ball, but the funness, the market growth has already happened. Right now, the S&P, and we're only 12 days in a year, is up by 1.4% already. And to make it even further, historically, the first week, the first 5 days of the stock market, if those first 5 days are high or up compared to down, 85% of the time, the market has finished up. Now, of course, past performance does not guarantee future results, but it is a 85% chance because the market being up already, the market's going to go up. So if he stays firm, and it's all types of beef and argument and mudslinging back and forth between the Fed and across the street, the White House, it's going to be political theater. CNN, MSNBC, is it still MSNBC? Fox, they're going to make a lot of money on advertisement and eyes, and it's going to have the market manipulated. And us, that means opportunity. So it's going to be days where Powell says he doesn't care what the president says. He's not going to lower rates, and the market is going to go down. Great opportunity to then buy things at a lower price because everything's going down. It's going to be times where Trump says that he's going to fire Powell any day now, but really he cannot. You can't do an executive order to fire him, so he cannot, but he's going to say it and the market's going to go up. That's going to give us the opportunity to sell investments at an overprice so we can sell high. We never want to sell. We want to borrow high. But if it's a retirement account, you can sell like a Roth IRA or a traditional IRA, for instance, right? So we sell high, and then when it goes back down, because everything returns to the mean, we are going to be able to buy that stock again at a lower price. So all the chaos, because Jerome Powell stood firm, is going to help you if you're managing your money correctly. Now, if we're like in an index fund, where we close our eyes and hope and pray for the best, then we're going to have swings up and down, and we're just going to have to deal with what we deal with. Now, again, I believe, not a recommendation or information, but I believe the market's going to end up being up this year, right? Again, 85% chance because of already what's happened, and the Fed's already lowered rates already 3 times out the past 12 months. So we believe the market's going to go up. The other side of the coin, well, we'll get to the middle. Before we get to the other side of the coin, the middle, the stimulating the economy has already happened. Why do you say that? Because Trump ordered $200 billion of bond buying, which means liquidity. And when there's more money in the market, then there's more assets that are liquid. And when more things are liquid, that gives us an opportunity to buy, spend. Think about your bank account. Is it just me? Or is that you're working hard, but you're not seeing the financial results that you want? We're clocking in, we're clocking out, we have the income, we're making the money, but our wealth is not growing like we want it to. Well, my friends, it's not your fault. You know why? Because we're never taught how money works. We're taught how to spend it, but we're not taught how to leverage the money that we're making right now to build wealth. Now, wealth, it comes in all different shapes and sizes. The question is, how much wealth do you want for you and your family? But the best part about it is help us on the way. Join us during our 5-day mentorship, where you learn how to structure your money, reduce your tax liability, increase your net worth, and build wealth. We'll show you how to go from a wealth builder to a wealth strategist to a wealth creator, and leaving that long-lasting legacy to your family. Click the link below and join us on our 5-day mentorship, where we'll help you accelerate your wealth. Now back to the episode. Let's say on average, we have $5,000 in our bank account, right? Out of nowhere, we had a liquid event. We had something that happened, a bonus, a raise, something got paid off, and now we have $8,000 in our bank account. So $3,000 more. What do most Americans do? Do they save that money? Do they invest that money? They spend that money. And we are a consumer economy. So when we spend money, what happens? Well, we know what happens. The market goes up because companies are making money. Their profit margins are going up. They have the same expenses, but now more profits. So higher profit margin, their stock goes up. Us as investors, we win. So we're going to see the market go up, in my opinion, anyways, because of liquidity. That's why you have Goldman Sachs saying that they think the market might be up by 16% this year. They also said that Bitcoin will be in between 180,000 to 200,000 a coin. Right now it's at 90,000 a coin. That's doubling because with more money, what do Americans do? They spend or they gamble. Now, Bitcoin is not a gamble, in my opinion, but some people look at that. So they might put more in Bitcoin. They might start that consulting business that they wanted to. And then they talk to their favorite certified financial planner like myself to create tax strategies and business building so they can get more write-offs. So this is why I believe the market is going to go up anyways. But again, on this side of the picture, if we take advantage of the market, the ups and the downs from a management standpoint, we should be able, past performance isn't guaranteeing future results, but we should be able to outperform the market by doing that. Now on the other side of the ledger, and this where things get crazy now for your portfolio, but then hurting. Oh, Elizabeth, it's the big one. If you guys have watched Sanford and Son, it's the big one, Elizabeth. This is where things will get very, 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 very good this year, but diabolically bad in 27 and in 28. Fed Chair Jerome Powell says, you know what? The heck with it. Screw it. I got money. I'm going to go to my lake house in wherever, let's say Virginia, for instance. I don't know. I'm gone. I can't deal with this foolish guy. And I know I'm not going to be reappointed come president. So I'm out of here. Adios. In the words of Chris Brown, I'm shooting you the deuces. And he resigns. Well, guess what happens? Trump is going to have somebody who's bullish, right? Hawkish, aggressive. That's what hawkish is, aggressive. And they will continue to cut rates. When we cut rates, more liquidity. What does that mean? More spending. We're spending more money. Companies, I have the opportunity. So walk about this. Why does a company make more money when interest rates go down, especially small cap companies? Well, here's why. If I'm a company and I'm used to borrowing money and paying, let's say, 3%. And now when I borrow money, it's 1%. What's going to happen? I'm going to borrow more money. I'm going to spend more as well because I'm not paying back the Federal Reserve as much money. So you have more money pumped into the system. People are borrowing more. Us as consumers now, a car loan that used to be 4% is 2%. I'm going to get that new car. My house mortgage is 4.5%. Now it's at 3%. I'm going to refinance. Who's making money there? The banks, the banks, the banks, the banks. So the lobbying companies of the banks, what are they going to do? Hey, Congress, find somebody that's dovish. They're going to lobby. They're going to push commercials. It's going to be so many easier ways that you can lend because they're going to ease how hard it is to get money. So it's going to be very easy to get money, very easy to spend money. Animal spirits. Are you like the 83% of Americans who want to get a trust, who want to get a will, want to get a power of attorney, but you don't have one? Well, you are not alone because 22% of Americans have one. That means 1 out of every 4 families have a trust, a will, and a power of attorney. Which bracket are you in? 1 out of 4 or 3 out of 4? It's okay because we have the Relax Estate, a fully automated AI platform that allows you to create a trust, a will, and a power of attorney all at the fingertips. And if you are an insurance agent, tax professional, financial advisor, notary, or in any business profession, you can even white label this to your clients. You grow your business, you help your clients, everybody wins. Visit our website, www.therelaxestate.com. Right here, therelaxestate.com. and you can create a trust for your family, or if you're a business owner, want to use it to scale your business and help your clients, you can do that as well. Now back to this wonderful episode. So what happens? We are a consumer economy. More things are bought. More companies are making money, especially small cap companies. Small cap companies are companies that are in between. They're big, right? But 500 million to 2 trillion, 100 million to 2 billion. Those are small cap companies. A lot of money, but they're quote unquote considered small cap. So those companies are going to go up more. You see the larger cap companies, if I got, $1 trillion, and now I go from 1 trillion to 2 trillion, that's a lot of money. Yeah. But if I'm a small cap company and I go from 100 million to 500 million, percentage wise, that is 3x, not 50%. So when interest rates go up, things that's tied to the Russell 2000 typically go up more. That's why we're seeing right now the Russell 2000 up a lot higher than the S&P 500 over the past few months. With animal spirits, two things will happen. Number one, the market in that instance, if Jerome Powell retires, the market is going to explode, you guys. Again, past performance does not guarantee future results, but with all the bond buying we've done and already priced in that the market might be in between 12, 13%, not including the bond buying that we did a few weeks ago, we might easily see 30 to 35% this year if Powell leaves and Trump appoints somebody that's just going to cut rates. I mean, Trump wants it down to zero. Remember last time it went down to zero, what happened, right? That whole growth in 2020, between February and March in 2020 during COVID, the market was down by 45%. But then the market ended up being up by almost 20%. Ping is right, my friends. That was a 55% gain from April to December. Zero interest rates had a lot to do with that. Not saying the market's going to go up by 55%. I'm not saying it's going to go up by 35%. What I am saying is that if we cut rates to zero and Trump, he doesn't care. He doesn't have to answer anything come 2028. Heck, he don't answer to nobody now. Nevertheless, he can get reelected again. He don't care. He has a legacy to uphold. Not saying it's right, not saying it's wrong, but it is what it is. I'm not being political, I'm being factual. So with that being said, it's going to be a huge amount of growth in the market if Jerome Powell steps down. Even though number two is going to happen after that, we all know it, but we'll kick the can down the road as politicians. And what is that? Inflation. You see, after 2020, we had 2021, and 2021 kind of peaked into about July. And then slowly but surely, inflation peaked, and then boom, it skyrocketed. When inflation happens, guess what happens as well? All that spending that we're doing, all that extra money we have is gone. But from a momentum standpoint, we're still used to spending that money. So now we have to change our spending. What happens? We get into more debt. It's more defaults. People can't pay for things. Things get repossessed. And the economy goes not crashing down, but the economy goes slowing down quickly. Think about how it felt between late 21 and early 2023. It felt bad. But then the verbatims still felt bad until about 2024-ish, early 2025, right? It's like a earthquake. Join us in our school community as we have modules, classes, courses to go from a taxpayer to a wealth builder. How to use our cliff, dip, bear strategy to do better with your investments. How to acquire businesses and how to use your retirement plan to grow and not pay taxes. What? I can have a retirement plan grow and not pay taxes? Yes, your IRA or even your 401k at your employer. This and other things we focus on in our school community, the Relax Investor. And guess what? You get 7 days free access and you get our weekly coaching calls every Wednesday. You and hundreds of people ask questions to 6, 7, 8, and even 9-figure business owners that tell you how they created their business, how they run their business, and how their finances is as smooth as it can be. So click the link below and join us in our Relax Investor Academy to help you scale your finances. You ever notice when you have an earthquake, it happens, but then after that happens, they say the worst part of an earthquake is the tremors. Well, that's exactly what inflation is. We feel it, we know it's there, but then the worst part is after effects, and that's the tremors. And that was 2022 to basically early 2024. As things continue to go up, the grocery bills went up like crazy, it seemed like overnight, and it have not came back down. So if Jerome Powell does leave, we're going to have a great year, in my opinion, in the stock market for the year 2026. But 2027, definitely in 2028, we're going to be in some trouble. Stock market wise, also economic wise as well. So what do? Well, we know one thing. Nobody knows but God the future. We need to position our portfolios today to take advantage of whatever's going to happen. We know because the Fed lowered rates 3 times after the past 12 months, the market historically is going to go up this year. We also know with the $200 billion of bond buying, we know that the market is going to go up more probably than what it should have. And if Powell resigns, bank stocks, bank sectors, for example, small cap companies, for example, those are stocks that are going to historically over and outperform the market. But then you have to be positioned. And position is very, very important. It's like when you're racing, when you're playing a game of Mario Kart, sometimes being first before that checker flag goes down, they say start, it's not the best. Sometimes being in the back is the best. So you could zoom when it's an opportunity. So it might not be where if he ends up resigning or something happens, you say, you know what, we're going to be YOLO. Let's find opportunities. Let's find stocks that, are down because of what happened last year, right? Some of those infrastructure plays like PAYC that I talked about all the time, that cloud-wise, I think is going to go up dramatically this year. Symbol TTD, Trade Desk. Also symbol TAMT, right? Things that are cloud-based that was beat up. Semi microcomputers beat up like crazy. Chips, you would think it might go back up. Finding those types of opportunities where they got beat up for whatever reason, if I could talk, and for whatever reason they have not recovered like the rest of the market. Those are the stocks that we want to look at, the small cap stocks. Those are the stocks that we want to look at. Long term, maybe not. Your mega tech, your Apples, your Googles, your Nvidias, things that we still want to continue to invest in and use the cliff, dip, bear strategy. Goes down by 5%, we put 33% in, goes down by 10%, put in another 33%, and goes down by 20% bear market territory for that stock, put in the rest. Use that strategy, of course. But by doing that and identifying those stocks that are right now are not in pole position, this is why your portfolio 6 months or a year from now, if Jerome Powell does leave, will look rather pretty. But that's just step 1. Step 2 is rebalancing, making sure now into 2026 is here. And now it's animal spirits. Markets are theoretically at an all-time high. It can't get any better than this, but our mind thinks it is. When everybody is running towards something, that's when we run away, run away, run away. In the words of not crazy Kanye West, regular Kanye West, right? I want the old Ye back. I want the old Kanye back. College Dropout, one of the best albums of all time. Where's that Kanye? Story for another day. So that, my friends, is my synopsis. Today was a big day. Government overreach? Probably. Should Trump have done that? Probably not. I mean, come on. Trump is Trump. It is what it is. That's why voting is so important. Not being political. You vote for him. Great. You didn't vote for him. Great. If you didn't vote at all, it's your fault. Because you could have had an impact if you had a bigger mandate and one more, one less, or didn't win at all. So that's why we vote. That's why we voted. Vote. Anyways, though, that's great information. So today, landmark day, not because of the political outrage, but the opportunity that we have with our portfolio. As always, like, subscribe, share to our channel. As always, let's make some painful, painless purpose together, y'all. Peace.
And you just want to get paid. Tired of making no money mistakes. Make a payment on your bills and you still late. Yeah, painful profits to help you seek change. And you just want to get paid. Yeah, tired of making no money mistakes. Make a payment on your bills and you still late. Painful profits to help you seek change. Yeah, cut the show and just listen. You want to feel empowered.